Good afternoon and happy Thursday, everyone. This is Scott Wohlers with River Place Capital. It is Thursday, April the 24th. I want to take just a brief minute to discuss what equity markets did last week. As volatility remains king of the castle in the equity markets, man, are we seeing it both to the up and downside in the equity markets. But the S&P 500 for the week last week, as of last Friday, was down 1.5% or down 1.5% on the week. However, the mid cap index and the small cap index for the week were positive. The mid caps were up 80 basis points or 0.8%, and the small caps were up 70 basis points or 0.7%, outpacing the large caps. And a lot of this had to do with a very big underlying trend that we've been seeing prior to the big market sell off and after the big market sell off. And that trend is that the value sector, especially in the large caps and across small and mid caps, are significantly outperforming the growth sector this year. The value sector as of today, as of this moment, as of 11:42 a.m. on Thursday, April the 24th, is only down 2.5% on the year. Conversely, the growth index is down over 12%. So you have almost 10%, 9.5%, almost 10% outperformance on value than you do growth year to date. So you're seeing that in small caps, mid caps, and large caps. And why you're seeing the large caps down so much last week and the mid caps and small caps actually up is because the growth sector was down last week, but the value sector was actually positive. 30, if you're thinking about what makes up 30% of the S&P 500 on a day-to-day basis, those are those big mega cap growth names. And so as they're still coming down, you're seeing the value come up, but the index itself come down while the value sector is coming up. And so that's why you're seeing such divergence. And so the S&P, for example, is down about 8% year to date. Value's outperforming by 5.5% over the S&P 500. And that is because these are more mature, seasoned companies. They also haven't had the growth that some of these growth names have had over the last 2 years. So they don't have all of those profits baked into them, as well as the economy continues to remain resilient. Now, growth trends have been cut by the IMF, by the Fed, by everyone for the United States because of the uncertainty regarding tariffs. And the headline movement from we need to get rid of Jay Powell to walking those comments back to tariff policy and how that's all going to play out, it continues to create uncertainty. And that is what's causing the volatility in the market. We are moving market headlines or moving markets in big swings both up and down based on headlines of tweets and things along those lines that are really moving the market along. However, we are now getting corporate earnings, and this is paramount. This supersedes all of the noise and the headlines that we hear is corporate earnings. What are companies actually saying, and what are they really reporting? Because what they say and what they report are also two different things. So far this quarter, earnings have been really good. Forecasts are, a coin flip depending on how resilient you are on tariffs and what companies are exposed to internationally versus domestically. All of that varies, but the calls for this deep, dark recession are starting to wane, and you're seeing more confidence come back into the equity markets, and you're seeing investors starting to come in off of these earnings reports and the commentary from companies. A lot of companies are still remaining and keeping their full year guidance. They're saying, we don't know what's going to happen. We're going to keep our current guidance as is. We're not raising it. We're not cutting it. We're just going to keep it as is and move forward. So we don't yet know the outcome yet. Expect continued volatility, both up and down, for the coming weeks until we get to some type of solution or deals done on tariffs and international trade policy. Expect the volatility to remain the common denominator here. So if you have questions about how to navigate the volatility or how to see through it, feel free to give us a call. We'd love the opportunity to speak to you. You can reach us at 904-346 3460. Or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.